Revealing my next big investment here with you guys on YouTube. Sometimes I try to share stocks that I'm buying, stocks that I'm selling. I told you guys about Outstore, which has been doing really well. Mama's Creations, up 1,000%. GFL is starting to catch up. It hasn't been doing too well, but it's starting to play out. And I even told you about AMD, which I unfortunately sold AMD too early. I made 375% on my call options, and if I kept them, I would be up about 650%. Now, this investment is very similar to AMD. It's in the same sector as AMD, semiconductors. It has the same bad sentiment that AMD had back in 2024, 2025 when I was buying it and I was talking about it. So I'm going to talk about this investment in today's videos. Those videos, they don't get a lot of views. So all I'm asking is if you do enjoy it, please press the like button and let me know what you think in the comments. Now, this stock is Qualcomm. And if you ask anybody around Qualcomm, they get something called like an ick. They get an ick around the stock because it just hasn't performed too well. It's down 18% over the last months. It's pretty much been flat over the last 5 years. The same arguments that people were giving AMD, they're pretty much giving it to Qualcomm because AMD was kind of late to the data center game. Now Qualcomm is getting into data centers and people are telling them, you are too late. We don't believe your guidance. And this is what I'm going to discuss in today's video. Now, most of you guys actually use Qualcomm every single day of your life, but you don't even know it because Qualcomm owns the G series. They own 4G, 5G, and soon to come 6G. So if you have 4G or 5G data on your phone company is paying Qualcomm royalties for having 5G on your phone. This is one of the widest moats you could have in the market, where they own the patents to 5G. They collect royalties every single year, very predictable royalties. They have like 87% operating margins because they own the 5G. Soon they're going to be launching 6G. All the mobile phones will have to incorporate 6G, and they have to pay Qualcomm royalties for using 6G. So this is a very profitable recurring revenue business model, and this is a cash cow for the company. And I like this business very, very much. Now, Qualcomm specializes in mobile chips, and they have such a competitive advantage in this area that someone asked Jensen Huang if NVIDIA is planning to enter the mobile chip market. And he said, no, we don't have to enter the mobile chip market because Apple and Qualcomm do such a good job at making and designing those chips. And he even said, go out and buy Qualcomm stock, and Qualcomm stock went up on the news and then it went down, the next day. But he's not planning to enter the market because Qualcomm is pretty much the leader in making mobile chips, which is very interesting. Now, aside from mobile chips, Qualcomm is about to become the largest supplier of silicon chips for automotives. They are the leader in automotives. It's not even close. With 500 million cars on the roads, 90 million plus cockpits. I believe they're in Teslas as well. I know they're in BMWs, they're in Mercedes, they're into Toyotas, they're into many of the popular cars that you know. They all have the Snapdragon Qualcomm automotive chips. And this is an area that they didn't exist in 5 or 7 years ago, but they decided to enter this area. They took market share and they became the leader in automotive chips, which is very amazing to me. Now, before I proceed further, we have to understand the difference between cloud computing and edge computing. Most of what happens in the data centers is mostly cloud computing. It goes on the cloud and you have the cooling and all the liquid cooling and all the things you have in the data centers. With edge computing is a little bit different because with edge computing, just like your mobile phone, most of those things happen internally on an internal server. Most of the things that happen in automotive, they happen internally. They don't really happen in terms of clouds, which require a very different design, and it requires a very different, you could say, business model and very different chip in general. And this is where Qualcomm has a competitive advantage over AMD and over NVIDIA because they design those edge computing related chips that are used in smartphones and they are also used in automotive. Now, it's also worth understanding the 3 phases of AI. So the first phase was training, and NVIDIA is by far still the leader in training. When I was talking about AMD, I was talking about the second phase of AI, which was inference. Whenever we train those models, we want to run workloads for them to perform tasks. This is inferencing. And AMD knew that NVIDIA was leading in training, so they were focused on having an edge in inference. And this is where AMD was able to have a piece of the pie in focusing on inferencing. Now, what happens with inferencing, I should say after inferencing, is mainly agentic applications. And this is again what Qualcomm is focused on, because Qualcomm knows they can't compete with NVIDIA in training. They can't compete with AMD in terms of inferencing on a traditional way. So they're focused more on LLMs, on memory efficiency, and on agentic applications in general. Agentic applications is mainly when you have an agent that does a lot of things for you. Maybe the agent pays your bill. You have the Meta Smart glasses, which Qualcomm makes the chips for the Meta Smart glasses. Maybe it scans the QR code on your receipt and it tells you just pay the bill with whatever card, and the agent pays the bill. You tell the agent go cancel some appointment. The agent actually calls that person and cancels the appointments. And all those things will most likely happen not just within your phone, but through something called personal AI. Personal AI is once we implement a lot of technologies and a lot of agentic technologies into things that we wear every single day, such as jewelry, such as smart glasses, which again, the Meta smart glasses are very popular. Google smart glasses, they also use Qualcomm chips, maybe through a smartwatch, which also uses the Qualcomm chips for Samsung, through maybe something you wear or maybe your earpods. Those could also have agentic applications that you could talk to the agent and the agent will be performing your tasks. This is just starting to roll out. People are starting to get used to it. But as people get more and more used to it over time, we all want to have more efficient lives. And if you have an agent that does all those things for you, why would you have to do it? So this is a big game changer in general, because over the last 20 years, everything pretty much revolved around your phone. So you have a laptop, you have an iPad, you have the earpods, you have the smart glasses, but everything revolves around your phone. Right now, or I should say over the long term, everything will revolve around the agents, which you still have the phone, but the agent will be your main line of communication. And you're going to communicate through this agent with many different things that they call personal AI. And because Qualcomm, again, has an advantage in mobile phones, they have a specialty in terms of automotive chips. Those chips are also used in a lot of those personal AI. This is why Meta Smart Glasses is using them. This is why Google is using them. And this is why OpenAI, where they're working on launching a device that uses ChatGPT and AI agentic features in general, they are using Qualcomm chips, not AMD, not NVIDIA, Qualcomm. Why? Because Qualcomm specializes in what I explained to you here, edge computing, and they are mainly focused on efficiency, and they are focused on just being more efficient in general. Because if you look at agentic AI, let's say versus conversational AI, with conversational AI, you make one call for 500 token with a chatbot, but with agentic, you could pretty much 50 to 100 calls, and it's like 1 million tokens. So it's more about efficiency of per token, and this is what the company is focused on. AMD and NVIDIA are still competing in data centers and workloads and large language models. This one is trying to target a niche, which is mainly agentic features, efficiency, and personal AI in general. And this is why this stock gives you a lot of exposure to those glasses and personal AI, which I believe are the future. And they have again, much better advantage, in my opinion, than AMD and NVIDIA. Now, because they have an advantage in all those things and they're being used in such small applications, they can also be used in robotics. So we talked about robotics, we talked about Fiscal.AI, we talked about Ouster as a bet on sensors. I told you guys about actuators, which are mainly the tiny motors that helps change everything in all the motions. And I told you guys about rare earths, because those motors include a lot of rare earths, and 90% of rare earths comes from China. And I explained the whole thesis. But those robotics, not just humanoids, any kind of physical AI, requires communications through a lot of those chips, and those chips are again edge computing based chips. And the company that has the expertise to make them is Qualcomm, much more than AMD and Nvidia, in my opinion. I'm not downplaying Nvidia here. Nvidia, I think, will also be leading likely in a lot of, I shouldn't say personal AI, I should say robotic applications. They're also entering the automotive space. So they're not, again, sleeping at the wheel here. They have an amazing CEO, but I think it's not a one winner take all market, especially where Qualcomm has been doing this for the last 25 years. I think they have a competitive advantage in this area. Now, if you look at the company's revenue mix for 2025, most of the revenues still come from handsets, and the handset or phone market, I should say, is by far the most cyclical market. This is why their most recent few quarters were not really good, but they said that they see the Chinese market bottoming out this quarter and should get much better from here. So again, the volatility will be reduced. And the rest from automotive and IoT, which is Internet of Things. Now, 2027, they enter the data center market. They start to expand over there. 2029, they also have like 25 to 30% of the revenues coming from data centers, which will massively reduce the volatility of the handset market. Now, the main argument against Qualcomm is the same arguments that people were giving AMD, which is, aren't you too late? NVIDIA has been doing it for many years. How could you, AMD, try to compete with NVIDIA? Well, they focus on inferencing. Same thing they're asking Qualcomm. Qualcomm, aren't you too late? AVGO is doing this, Marvell is doing this, AMD is doing this, NVIDIA is doing this. You have no chance at competing with those players. So Qualcomm is coming up with a very different technology, and they're focused on what's, mainly I told you guys a lot about agentic stuff and other things, but they're focusing a lot on efficiencies, mainly within memory. Because we have the memory bottleneck, which is mainly HBC, it's HBM, I should say. It's not going away anytime soon. So the company came up with a different design that uses HBC memory, not HBM. And the results are pretty mind-blowing. Those results from the HBC chips have 6x more bandwidth per watt versus the traditional HBM that AMD and NVIDIA put up, and they have 200 times capacity per watt versus a traditional SRAM. Now, the way they're doing this is they're using HBC memory, not HBM memory, which is what's in shortage, and it's more expensive. And it's just this is what's really causing the shortage. Now, the CEO explained it much better to me. He said, we have broken through the memory bottleneck, and they're mainly putting the XPU right under a DRAM stack. He said, a great analogy I use with reporters is, imagine working in the same buildings that you live. And so you only have to travel up and down. So they're taking the XPU, they're putting it right under the DRAM, so the compute doesn't have to travel as much, and you don't need those very heavy, very expensive HBM memories. They're using HBC memories, which could sometimes be used in a lot of smaller devices and a lot of phones and other things. They're taking this technology and they're taking it to the data center space with a differentiated, you could say, product that has a very high chance of competing with NVIDIA and AMD because they're focusing on the bottleneck, which is ABM. They said HBC eliminates the HBM tax with industry-leading performance per watt, and a lot of the analysts were shocked, and I'm still shocked by this. You could say it's not really such an innovation, but it's an innovation for them to bring it to the data center space, which I believe is very interesting in general. Now, a lot of people, again, are saying that that's not going to work out and it's all pie in the sky because they don't have any revenues. But the company signed 2 hyperscaler customers of $1 billion plus revenue each. We don't know which ones are those hyperscalers, but there's a lot of rumors that it's ByteDance from China, which owns a piece of TikTok, and it's also Amazon. We don't know that yet, but those are the speculations around those 2 hyperscalers. In addition to those 2 hyperscalers, they also signed a deal with Meta where they have 2 generations with Meta, and they're going to start shipping those chips to Meta. And they also launched a partnership with Satya Nadella from Microsoft. And Microsoft spoke, or the CEO spoke during Qualcomm's Investors Day, and he said, we are collaborating on a new platform purpose built for agent first devices. Again, guys, this is the future. It's not just training and inference, it's the agentic experience, which is where Qualcomm is focusing on, and it requires a totally different chip than what's being made by AMD and NVIDIA. And this is what, again, Satya Nadella said. He said HBC implements an innovative architecture with high memory bandwidth and integrated compute that unlocks significant improvement in cost and performance for the next generation of AI infrastructure. So there's so much more to come. So even the CEO of Microsoft is endorsing this technology. So could Qualcomm be late? Maybe they could be late. But I think a lot of this is priced into the stock, and I'm going to talk about the valuation later in the video. What if they make little to no revenue from data centers? I think the stock could still do well over the next few years because I think it's very undervalued. Now, the main question again is how are they going to compete with NVIDIA and all those companies that have been doing this for a while? This is why the company acquired another company called Modular. Now, what Modular does is kind of similar to what CUDA does for NVIDIA. So you have a lot of companies that use many different chips. They have AMD, which AMD has ROCm software. Intel has their own kind of software. NVIDIA has the popular CUDA software, and they have all these different softwares. But what this company does, Modular, is they integrate all those softwares into one software within Modular. They can manage them all together. So it makes it a little bit easier for the companies that want to adapt a different chip, not to be, you could say, in the CUDA jail of NVIDIA. Again, I'm not an expert here. I honestly don't know the details, but based on what I read and based on what I've seen, this is what this Modular acquisition does. And a lot of people said it's a game changer, and it will really help, you could say, minimize NVIDIA's CUDA's moat into integrating different chips in general. Now, if we look at the company's guidance, back in 2024, they provided 2029 revenue guidance of $22 billion for non-handset revenue, which is the less cyclical part. 2026, pretty much like a week ago, they provided total non-handset revenue guidance of $40 billion. They pretty much doubled their revenue target from $22 billion to $40 billion, guys. And the stock is lower than Investors Day. To me, that's a lot of confidence from this company. If they weren't seeing the demand, if they were not seeing all those things, they would not have doubled their guidance. And this is a company that has a history of actually meeting guidance. They grew 2x in revenues from 2020 to 2025, and they 3x their earnings per share from $4.19 to in 2025, they did $12.03. Again, 2026 is due to the cyclical handset market, but they said it's bottoming out and it's going to get much better from here. So as they actually have a history of beating their guidance, they have their credibility here at risk, and they're doubling their target. They could increase it 40-50% and raise it, but they actually doubled it. And to me, that sounds like a massive confidence in general. They even provided earnings per share target of over $18 by 2029, which is pretty much around 3.5 years from now. Okay, now this is how I'm going to value Qualcomm in today's video. We're going to look at the P/E ratio. It's trading at 18 times forward earnings, and the company has some stock-based compensation, so I'm not adjusting for that, but non-GAAP is trading at about 18 times earnings, and is they're guiding about $18 of earnings per share. Okay, now if you remember, I showed you here that the company is expecting to have about 20-25% of their revenue from data centers in 2029. Now, the company has two hyperscalers signed with $1+ billion contract each. They have a partnership with Meta, and they have a partnership with Microsoft. So that's not pie in the sky, okay? But let's assume they generate nothing from data centers. They generate $0. Okay, so I'm going to take out 20% of their earnings per share guidance from $18 per share to about $15 per share. Okay, I think it's fair. Now we're going to take the $15, simple calculation, and I'm going to time it by 15 times earnings, which I believe is cheap, but this is the company's average multiple, although I think it's different from what it was, but let's just take in 15 times earnings. This is about $225 per share. The current share price for Qualcomm is about $175 per share. So we take in 225, we divide it by 175, we get about a 28% on the upside over the next 3 years or so. And you're also getting about a 2% annual dividend for holding the company. So all in all, I see about 33, 34% upside over the next 3 years, or about a 10% annual return on the worst case scenario. I don't know about you guys, but 10% annual return to me with such optionality and call options is not the worst return in the world. Like if I was wrong, I get 10% a year, still better than leaving it in cash and getting 3.5%. So to me, that's not bad at all. But that's not even the base case scenario. To me, that's like the worst case scenario. Now, the best case scenario, you could say, and maybe again, it's not the best case scenario, but we can take in the $18 of their guidance of earnings per share, and we got to time it by 20 times earnings, which I don't think 20 times earnings is expensive, but we're going to do that today. We're going to get 20 times earnings. I get about $360 per share. The stock right now is trading at about $175. This is about 100% on the upside over the next 3 years, not including the dividend, which is about 2% annually. That adds a little bit to the return, maybe 210%, or I should say 110% upside over the next 3 years. Now, that's not including, again, any more acquisitions, which they did a lot of them. It's not including if they get over $18, because the guidance is not 18, they said over $18 per share. And it doesn't include, again, other things that could happen with the company. So worst case, I'm seeing a 10% annual return. Best case, I'm seeing about a double, more than a double in 3 years. And maybe it could be even better if the market realizes the optionality within the OpenAI devices and other devices in general with Meta smart glasses, and it decides to rate it like AMD to 50, 60 times earnings. Then we're talking about a few 100% in 3 years. It's not bad at all, guys. So for me, I like it very much over here. And I know it sounds amazing, but there's a few risks that I have to highlight in the video. The first one is Apple risk. So the company designs a lot of Apple chips. Apple is starting to design their own chips. And this is the reason why the stock has been struggling, because people knew it was coming, it was coming, it was coming. Well, it's going to pretty much end within 2027, 2028. They're going to lose about $7.8 billion from Apple. And this is priced in the guidance. Okay, so this is all priced in. It's not a surprise. And it's mainly included in their estimates. But that's another one where people want to buy it and they say, yeah, but they're going to lose the Apple revenue. And once I think they actually lose the revenue, people will look behind like, okay, it's done, and what's next right now? And the headwind will be gone. So this is a big one with the company, but it's again priced in the guidance, which is important. The second one, which I have to talk about, is the China revenues. So the company makes 46% of the revenues from China. This is a significant, you could say, percentage. Now, most of it is not in actual chips. Some of it is due into the licensing of 4G and 5G, but they also have some risks over there. And they had the Chinese ban. It didn't really affect them on their chips or anything. They're not selling the NVIDIA powerful chips. They're just selling consumer electronic and other kind of chips to automotive companies in China and other companies in general. But as they diversify more into data centers over the next few years, I think the company will be much more diversified from China. Maybe potentially United States will go from 20% to 35, 40%, and that will help with a multiple expansion. But if that doesn't happen, again, I'm using realistic targets, 15 PE, 20 PE, I still get, 10% annual return or a double. So this is the risk with the company, is the China revenues, and also Apple, which is pretty much priced in the guidance for the company. So I like it very much. And I personally like it also because I believe in general, there's a lot of political backlash on data centers in general in the United States. And if by 2028 we have a change in administration and they ban the construction of data centers, AMD and NVIDIA will be much more affected than Qualcomm, because Qualcomm is just entering the data center space. So they're starting from zero. It's different than starting from $100 billion or $50 billion or whatever those companies make. I think, the company is much more diversified outside of data centers, which is now looked at as a disadvantage. But I think over the next few years, it could potentially turn it as an advantage if we have any political backlash on the construction of data centers, where I think Qualcomm could potentially fare much better than other semiconductors companies in the market. Of course, whenever I'm buying those stocks, I start with a small position and I average down. And I'm someone that have a long-term horizon. So if I buy a stock, it goes down 25, 30%. I'm not gonna be crying. I'm not gonna be upset. Not gonna be losing sleep at night. I'm gonna be happy because the business hasn't changed and I'm buying the stock lower. Now, if the business has changed and my thesis changed, then I take a loss and move on. If that doesn't happen, then I buy the dips and I'm a happy buyer. So if you want to look into the stock, don't do it just because of this video. You have to do your own research because you can't borrow conviction from me. You might be, again, whenever I buy stock, I don't know why it goes down first and I get called names in the comments. And once the stock recovers, no one tells me anything anymore. It's always funny to me, but that's how it works out. And I share everything I do in my group, by the way, when I buy a stock, sell a stock, all the other Fiscal.AI stocks, the miners, rare earth miner, and actuators, everything is in my group. This is the link if you're interested. But thank you very much for watching. Hope you enjoyed it. It was not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.